one of the builders at Nibiru. Today we're joined with Eric from C14. So with Nibiru's upcoming mainnet launch, we're partnering with C14 for payment integrations between fiat and crypto. We're hosting the space today to learn more about what they do, the advantages of C14, and how they'll help people on and off board in a secure and regulatory compliant manner. So without further ado, so from C14, would love to learn more about your background and what the product is.
Yeah, thanks so much for having me. It's a real pleasure to be here today. Thanks everybody who's attending and listening in. I'm the founder of C14. We started the company, I guess, in February of 2022, so it's about a year and a half old. And my thesis when starting the company was I wanted to build an on-ramp solution that makes it easy for everyone to buy, whatever asset they want globally. Before founding C14, I was the director of business development at Wire. And before that, I was the head of sales at Paxful, which at the time was the world's largest peer-to-peer Bitcoin exchange and very emerging markets focused. So it's been an interesting ride. Definitely, it's always good to build in a bear market, even though it doesn't feel that way day to day, as I'm sure the team from Nibiru can attest. And we went live with the service 7 or 8 months ago. And we've been slowly adding new payment methods, countries that we support, and blockchains. And we're excited about this upcoming partnership.
Awesome. So I guess, can you give background on, for those that don't know, what does an on and off ramp provider do? And then how do you facilitate those entry and exits for people and with fiat and cryptocurrency?
Yeah, absolutely. Moving value between the fiat world and the crypto world, or, the Web2 world and the Web3 world has always been a challenge. You're dealing with a lot of legacy financial institutions and getting them comfortable with what's happening in Web3 is a big part of the challenge, because ultimately you're relying on Visa, MasterCard, traditional banks to actually step in and help facilitate the payments. And our role is pretty simple. We currently do credit and debit cards in probably 25 different countries, and then we do bank transfers in a couple of different countries. And our role is to, basically quickly onboard a user, take the payment, and then disperse whatever asset they want to buy to their wallet in a really quick way that sort of approximates a Web2 checkout experience. So a lot of it seems very simple, and that's from the end user's perspective, and that's true for most payments, but there's a lot of sort of complicated machinery that goes on in the back end. So most of our time is spent sort of optimizing the machine and making sure that we can get as many payments through as possible, and working with our partners to make sure that, if someone wants to pay, it doesn't get blocked, it doesn't get held up, that type of thing. And then, the goal is that if someone wants to sort of, participate on DEX, trade perps, or whatever it is they want to do, instead of sort of routing them to some exchange where they have to sign up and it's this kind of complicated process and not all the exchanges work and all the places that you want them to work, we can just onboard someone quickly and easily. Our initial user flow for someone that's brand new, hasn't used C14 before, typically gets done in 5 minutes or so it's pretty fast. And then once a user is successfully signed up with C14, no matter which project they're using, when they come back, we have all their information sort of stored and ready to go. So if you want to do like a quick top up, you can get through that in 30 to 45 seconds, a minute, really, really fast. So we aim to make it a little easier. And we sort of think of our partners here as like we serve different buckets. Obviously, for users that just want to participate with something on chain, do some activity, our goal is to make it as easy as possible for them to do it. For for partners who are, we have an embeddable widget for hosting our widget. Our goal is so that they don't have to send their users off platform, because if you're building something in Web3 and users need a specific token to interact with you, if you're sending them to an exchange, if you're sending them somewhere else, I think a lot of builders don't realize, like, most of those people aren't coming back, right? That's just sort of how people interact with the internet. Once they're off a site, once they're off a project, they rarely return. So we view this as a way for people that are building on chain to better capture and better serve their user base, and not sort of send them on these goose chases to go register for MEXC or whatever exchange. And then finally, for the blockchains, the development foundations that sit behind the chains, or sort of however you want to think about it, we want to be a tool to help them reach as many users as possible. So we've been focused on adding payment rails in emerging markets, in addition to credit and debit cards in major markets. So we're currently doing bank transfers in Brazil, bank transfers in Mexico. We just added bank transfers in South Africa, and we're going to be adding local payment methods in the Philippines. So we sort of see ourselves as serving 3 different groups of constituents, and our goal is to make it as easy as possible for all of them to interact.
Got it. Yeah, that's awesome. How do you guys, on that note, prioritize like which chains and protocols to integrate with, and then also which countries and regions to support on the Fiat side?
Yeah, I'll start with the countries and regions. That's you can sort of go look at a heat map, right, of different activity geographically, and sort of try to back out, okay, well, where are the users coming from? And that gets you a pretty good idea of where you want to build. Most Web3 adoption sort of surveys, or whatever you want to call it, there's a lot of users in the United States, there's a lot of users in East Asia, there's a lot of users in Europe. That's typically where it breaks down. And then as you get into sort of more, look at things in a more pointillist perspective, play to earn is more popular in Southeast Asia, Latin America. DeFi might be more popular, more prevalent in North America. So you have broad ideas, but more importantly, you have to go find the local partners in each of these countries that will work with you. And that's sort of where the real challenge is. So it depends on the country. You might be looking for a banking partner. You might be looking for kind of an e-money service provider. You might be looking for a local exchange that already has some of these rails built, and you can kind of wrap them into your service. So we have a general idea of where we want to go. Obviously, given where our coverage is now, expanding in East Asia is kind of, or Asia more broadly, is sort of the logical move, and that's why we're looking at the Philippines so closely. But even then, it's like the Rolling Stones. You can't always get what you want. You might see a country that's growing really quickly, but because of regulations or because of whatever it is, banking rules, you might just not be able to operate there. So you have to kind of make the best of what you can do. And our thinking is that you add country by country, and eventually you'll be able to get everybody, but you might not be able to get everybody in the order that you specifically want to. And then when we're looking at different blockchains and which chains we want to prioritize adding, for us, we want to help people on board into Web3, and that only really matters if people actually want to use the chain itself, right? So in that context, we're looking for chains that are solving or focused on, real problems, real innovation, in places where we think the users will want to go, sort of where we think the puck is going to be. And that's what attracted us so much, frankly, to working with all of you, is we thought that what you're building is really cool. We could see a future where there's lots of demand and lots of users wanting to participate in this ecosystem, and that's that's ultimately how we do it. We're less driven by and I think a lot of people in the crypto space are sort of in this arms race mentality of, it's all going to be, what's the, transactions per second, what's the highest amount of transactions per second. And I don't think that's ultimately that's not how consumers drive decisions. That's not what drives consumer decisions, right? It's the utility they get from participating in the project. That's why people use these different chains. So we're not taking a very quantitative approach in that respect. We're just sort of trying to see where we think users will go, building to that, and then seeing what happens. And when we built C14, one of the core things when we were sort of building the architecture was I wanted this to be something where onboarding a new chain and then onboarding any of the subsequent tokens on the chain was a very sort of fast experience, right? Because the space moves really quickly, and you need to be able to be fast and not reactive. And I think that's what we built. So we're super excited for this partnership, and really looking forward to seeing what comes out of it.
Cool. So let's get into, I guess, the nuts and bolts of specifics on the product. So I guess, are there limitations on a daily or weekly limit for people that are using the ramps through C14?
Yeah, there are. And I'll give some context on why ramps actually put these limits in, and then I'll explain how we got to the limits that we have. When you're using a ramping service, whether it's C14 or MoonPay or whoever, you're using it to interact with a DApp or to load funds into a wallet or to do whatever, right? So the ramp is really just a way station in the service of what your actual goal is, right? For the ideal C14 user experience, people are kind of barely cognizant that they're even interacting with C14, right? The same way that when you buy something online, maybe you're using Stripe, maybe not, but it shouldn't really matter that much, right? It should be as much as possible kind of behind the scenes. That being said, especially with credit and debit cards, because we are the ones actually fulfilling the client orders, we're the ones on the hook if something goes wrong with the transaction, right? We're what's called the merchant of record in the transaction. And that means that if there's a problem, we would be liable for it. And when people look at ramps, they say, okay, well, it's a 3% fee or a 2.9% fee or whatever the fee is. That's really high. And I can see why people get that, a little bit of a sticker shock. But what you have to keep in mind is that this is a very low margin business. And if there's a chargeback or fraud that happens on our system, C14 is actually liable for the entire amount, right? So if someone comes in and buys $100 worth of Tether with a credit card, and 6 weeks later we get a call from the bank that says this person is disputing the transaction, we have to pay that whole $100. So it's a very low margin business, and there's actually, compared to the margins, really high risk with each transaction for us or for MoonPay or for banks or forever. And so the limits are a way for us to attempt to mitigate that risk if there's a flaw in the system or some way that people can exploit it. We can at least cap the damage until we figure out what the problem is, right? We've been gradually raising our limits since we launched, because what we've tended to see is there's people either buy the maximum amount they can or the minimum, which is, actually kind of what we were expecting, but we weren't expecting it to be so stark, right? And so we started at, I think it was a $500 per transaction limit. And then we raised it to $750. And then just last week, we raised it to 1,000. So you can buy up to $1,000 or whatever you want in one go. That's true for cards. It's true for bank transfers. And then the weekly limits are always twice that. So that there was 1,000, 1,500, now 2,000. We do have a lot of power users on the platform who have reached out to us and said, how can I raise it? How can I be able to add more at any one given time? And we're trying to figure out the best way to do that. That still keeps us safe, but provides a seamless user experience. We've got a couple ideas kind of that we've been whiteboarding about how to handle that, but we're not quite sure yet. But I think in a couple months or so, we'll have a solution that allows the people that, heavy transaction users that really want to do more, that will be able to accommodate that. But we're not quite there yet.
Got it. So it sounds like most of the risk is actually faced by the provider itself, not really the end user.
Yeah, so it's different this is like a regulated part of this is a regulated financial activity in a sense, and when you think about financial regulations, there's a whole bunch of different things you have to think about, and how sort of relevant they are to your business depends, right? So one of the big goals of financial regulation in the United States, in Europe, wherever, right, is to prevent people from interacting with bad actors, right? So the U.S. government doesn't want people sending money to people that work for the Iranian government. The U.S. government doesn't want North Korean hackers to be able to liquidate stolen crypto into fiat, right? That's one goal. Another goal is to prevent people that have had their identity stolen from being robbed. That second goal is really something that's a lot more applicable to us, right? Because we're dealing in essentially retail transactions, and that type of stolen identity fraud that's a lot more common. If you think about our limits, right, $1,000, that's not something that you would use to really do money laundering, right? Money laundering, you have to do big amounts, right? Millions and millions of dollars. So we're less concerned about that. I mean, we obviously have protocols and rules in place to stop it, but that's just not the crime that would occur on a platform like ours. So we're a lot more focused on making sure that people don't have, stolen identities aren't laundered through C14. And that means there's different checks depending on where you are. And in the same way that people, sometimes look at the fees and say, oh, wow, 3%, why do I have to pay that? Sometimes people look at the different checks that get put into place and say, well, why do I have to do this? And it's a worthwhile question, and I understand why people get frustrated by it, but it's just a part of how the legacy financial system works, or the traditional financial system, or whatever you want to call it. And, what we're trying to prevent here is somebody that has no idea about crypto essentially, getting robbed. And it's a delicate balancing act. We're kind of constantly trying to make sure that the way we can kind of perform these checks is as unobtrusive as possible, because our goal really is to have a Web2 checkout experience, and I think we're getting closer and closer to that. But there's a lot. It's a much more sort of complicated set of concerns on the back end than people realize, because again, on the front end, if you're just buying $200 worth of token X, it all looks really simple, but there is a lot of complexity that we have to manage as well.
Yeah. Is it the same for like input volume limitations as output? Meaning, do you have the same the same exact limits on how much you can bring on chain versus how much you can off ramp, or is it a little bit different?
They tend to be mirrors of each other. It's typically it's for a couple reasons. One, activity tends to be someone that's putting $500 in. Typically, like the inputs and outputs typically match, right? The same way that that makes sense for a lot of things, right? So if you look at how we handle in and how other people handle out, and everybody, the limits tend to be the same. I think if there's scenarios where you have, you're looking to do sort of mass withdrawals on chain, right? Like you want to liquidate like a huge book that you've built over the years. C14 is probably not the way to do that, right? You're probably thinking about going through an over-the-counter desk or something like that. But yeah, that the limits sort of industry-wide tend to be mirror images of each other in and out, even though the concerns there are slightly different.
Got it. And then how do you how do you price assets? Do you use like a specific oracle or like a combination of centralized exchange prices? For example, if they're on and off ramping ETH or Nibi or USDC, what do you guys kind of use for the reference price and like to handle volatility?
Oh, sorry, I think I was talking with muted for a while. Yes, sorry about that. We hold inventory on all the assets we sell. That way, we can minimize the amount of gas that's associated with each transaction, and that also allows us to prioritize instant delivery. On some assets, ETH, BTC, you couldn't have a 1-for-1 sourcing, right? So if someone wanted to buy, $200 worth of Ether, economically, it wouldn't make sense for us to go buy, send, right? But that also just allows us to, if someone buys, we have it on inventory, we deliver it. We're taking price risk on all those transactions. There's transactions where we win some, there's transactions where we lose some. It all kind of nets out in the end because it's random whether people are buying for more or less than we bought it for. But again, with the overarching goal of just having this experience as seamless as possible, we want to make sure that when someone buys something from us, they get it as quickly as possible. Sorry, was there more color on that you wanted?
Okay, sorry, I lost speaker access. So yeah, just a couple more. So I wanted to say, what's on your guys' future roadmap? You mentioned that you want to set up shop to be able to support countries in East Asia. Are there other areas you want to expand? And then what's the plan for like the rest of this year slash into next for C14?
Yeah, we're constantly looking to expand. Philippines is the next country we have on our list. We're having a lot of demand now from India, and we're looking for better ways to support that because the card networks that we use there are just not as prevalent. So we're looking at adding local payment methods in India, and so adding new countries, and each country takes 6 weeks, 2 months, maybe longer, because it's a pretty complicated process. And then we're largely looking at doing that, and then sort of refining the process as much as we can. Optimization. We're gonna do a full redesign of the widget over the coming months because it's still I forget the term someone told me, but it still looks very V1, and we think there's a lot we can do sort of optically to smooth that out. And trying to move our conversion rate, move our authorization rate, move our capture rate up as much as possible. That ultimately benefits the end customer that wants to use this more, and just have their transactions go through. And for our partners, the people that are actually hosting the widget and sending us traffic, we have a pretty nice dashboard system now that allows them to see what's going on with their installation of the service. And we'll be rolling out an API so they can connect to that programmatically and start to fill in wallet order history, stuff like that. So there's a couple key initiatives, but largely just continuing the work that we've been doing, and continuing to grow the business.
Awesome. So I think that's all of the questions I have. We do have a lot of people listening, so if someone wants to ask a live question, we'll hang out a bit for those. Feel also free to reply like on the space if you don't want to speak.
I won't bite.
Cool. So I guess we can end it here.
Excited about the future, and yeah, it was a pleasure to be here, and I want to thank everybody that came and listened. And I hope it was informative and interesting.
Yeah, thanks for joining.